Bill Ackman is a name that resonates with both admiration and controversy in the financial world. As the founder and CEO of Pershing Square Capital Management, Ackman has made headlines for his high-stakes investment strategies and outspoken nature. This video explores the various facets of Ackman's career, his notable investments, and the controversies that have surrounded him. Number 4. Early life and education. William Albert Ackman was born on May 11, 1966 in New York City. Raised in an environment that emphasized academic excellence and intellectual curiosity, Ackman was deeply influenced by his parents' professional backgrounds. His father, a successful real estate investor, and his mother, a retired teacher, imparted a strong work ethic and a deep appreciation for learning. This foundation shaped Ackman's future pursuits and career trajectory. Ackman's academic journey began at Harvard College, where he pursued a Bachelor of Arts degree in social studies. This interdisciplinary program allowed him to explore various facets of social science, economics, and political theory, providing a broad-based education that complemented his analytical skills. Following his undergraduate studies, Ackman continued his education at Harvard Business School, where he earned an MBA. His time at Harvard Business School not only equipped him with advanced business acumen, but also exposed him to critical financial theories and strategies, setting the stage for his future success in the world of finance and investment. Number 3. Founding Pershing Square Capital Management. In 2004, William Ackman established Pershing Square Capital Management, a hedge fund distinguished by its activist investing strategy. The inception of Pershing Square marked a significant shift in Ackman's career as he sought to leverage his investment expertise to drive meaningful changes in the companies he invested in. The hedge fund is renowned for its methodical approach to identifying undervalued companies that, in Ackman's view, possess untapped potential for growth and increased shareholder value. Pershing Square's investment philosophy centers around taking substantial stakes in a select number of companies. This concentrated approach allows Ackman and his team to focus their resources and efforts on a few key investments, where they believe they can affect substantial positive change. Ackman's strategy often involves launching high-profile campaigns aimed at influencing management decisions and corporate strategies. This activist stance has led to notable engagements with various companies, where Pershing Square has pushed for changes such as strategic restructuring, cost-cutting measures, and shifts in corporate governance to enhance shareholder value. Through these efforts, Pershing Square has sought to unlock hidden potential within its portfolio companies, aligning management's actions with the interests of shareholders and driving long-term growth. Number 2. Notable investments and successes. Target and the Gap. One of William Ackman's most prominent and contentious investments was in Target Corporation. In 2007, Ackman, through Pershing Square Capital Management, acquired a significant stake in the retail behemoth, signaling his intent to exert considerable influence over its strategic direction. Ackman's activist approach was characterized by a proposal to spin off Target's real estate assets into a separate entity. He argued that this move would unlock substantial value for shareholders by allowing the company to focus more on its core retail operations while monetizing its valuable real estate holdings. Despite his efforts to champion this restructuring plan, Ackman's campaign faced considerable resistance from Target's management and board. The outcome of this activism was mixed, with some elements of his proposals being implemented but not to the full extent he had envisioned. Nonetheless, his high-profile engagement reinforced Ackman's reputation as a bold and persistent activist investor, willing to challenge established management practices in pursuit of shareholder value. Ackman's involvement with the Gap also attracted significant attention and underscored his activist investment strategy. In 2010, Pershing Square took a notable stake in the retail giant, aiming to influence changes in both management and operational structure. Ackman's investment came with demands for strategic adjustments and improvements in operational efficiency, reflecting his broader commitment to driving corporate governance reforms. The push for change at the Gap was met with resistance from the company's leadership, illustrating the challenges inherent in activist investing. Despite the hurdles, Ackman's actions demonstrated his willingness to engage deeply with the companies he invested in, advocating for measures he believed would enhance value and improve performance. This involvement highlighted Ackman's dedication to leveraging his investment position to effect meaningful change within the companies he targeted. Herbalife controversy. One of William Ackman's most controversial and high-profile battles was with Herbalife, a global nutritional supplements company. In 2012, Ackman, through Pershing Square Capital Management, took a dramatic and highly publicized stance against the company. He accused Herbalife of operating an illegal pyramid scheme, asserting that the company's business model was inherently flawed and exploitative. To capitalize on his belief that Herbalife's stock price would decline as a result of regulatory scrutiny and declining business prospects, Ackman initiated a substantial short position in the company's shares. By shorting the stock, Ackman was betting that the market value of Herbalife would decrease, allowing him to profit from the anticipated drop. Ackman's aggressive stance quickly escalated into a high-profile feud with other prominent investors, most notably Carl Icahn, who took the opposing view and invested heavily in Herbalife. The clash between Ackman and Icahn became a media spectacle, drawing significant public and media attention. This confrontation was marked by intense public debates, media interviews, and a war of words between the two investors. Ackman's campaign against Herbalife showcased his willingness to engage in high-risk, high-reward strategies, leveraging his position to challenge the company's legitimacy and provoke regulatory and market reactions. The Herbalife battle not only underscored Ackman's readiness to tackle complex and contentious investment issues, but also highlighted his role in shaping public and investor perceptions through dramatic and contentious investment approaches. Number 1. Controversies and criticisms. Herbalife feud. The Herbalife controversy not only thrust William Ackman into the limelight but also subjected him to considerable criticism and scrutiny. His aggressive campaign against the company was perceived by many as a personal vendetta rather than a purely rational investment strategy. The intensity of Ackman's public accusations and his high-profile short position, combined with the prolonged nature of the battle, led some observers to question whether his actions were motivated more by personal animosity and by genuine concerns about Herbalife's business practices. The feud with Carl Icahn, a prominent investor who took a contrary position on Herbalife, further fueled speculation about the motivations behind Ackman's campaign. The media attention surrounding the dispute, characterized by public exchanges and heated debates, often shifted focus from the underlying business issues to the personalities involved. This public spectacle raised ethical questions about Ackman's approach and the broader implications of activist investing. Critics argue that the aggressive nature of Ackman's strategy, coupled with the media frenzy, potentially blurred the lines between legitimate investment activism and personal vendettas. The controversy highlighted the complexities and risks associated with high-stakes activist investing, including the potential for reputational damage and ethical dilemmas that can arise when investment strategies become entangled with personal conflicts and public drama. Valeant Pharmaceuticals. Another major controversy in William Ackman's career involved his investment in Valeant Pharmaceuticals, a pharmaceutical company that attracted significant attention and scrutiny. Ackman's Pershing Square Capital Management took a substantial stake in Valeant, driven by his belief in the company's potential for significant growth. Ackman was initially optimistic about Valeant's business model, which focused on aggressive acquisitions and a strategy of raising drug prices to maximize profitability. His investment was positioned as a high-reward opportunity, with the potential for substantial returns if Valeant's aggressive growth strategy succeeded. However, Valeant Pharmaceuticals soon became embroiled in controversy due to its pricing practices and broader management issues. The company faced intense backlash for its steep price hikes on essential medications, which drew criticism from lawmakers, patients, and the public. Additionally, Valeant's management was criticized for its aggressive acquisition strategy, financial practices, and lack of transparency. These issues led to a severe decline in Valeant's stock price and mounting regulatory and legal challenges. Personal and professional philosophy. William Ackman is renowned for his meticulous research and analytical approach when selecting investments, often targeting companies he perceives as undervalued or poorly managed. His investment strategy is marked by a deep commitment to understanding the intricacies of the businesses he invests in, which includes extensive financial analysis, industry research, and strategic evaluations. Ackman's approach goes beyond traditional investment practices as he typically takes large stakes in these companies, which allows him to exert significant influence over their operations and strategies. A defining feature of Ackman's investment philosophy is his willingness to engage directly with company management. He often initiates proactive dialogues with the leadership teams of the companies he invests in, advocating for changes that he believes will unlock shareholder value. This activist approach can involve pushing for strategic shifts, operational improvements, cost reductions, or even changes in corporate governance. Ackman's activism is driven by his belief that he can effect positive transformation within companies, aligning their management practices and strategies with shareholder interests to drive long-term growth and value creation. Thanks for watching. Don't forget to like, comment, and subscribe for more.